Hey, Cal Ewing here, and in today's video we're going to talk about the importance of having a residential mortgage loan originator, an RMLO, vetting borrowers if you are creating an owner-financed mortgage note, or if you're a note investor buying a note that was originally owner-financed or originated as an owner-financed mortgage. So before we discuss an RMLO and what they do, I want to go back in time right around, if you saw the movie The Big Short, back to around 2009, 2010, and the time leading up to that. At this time, banks were going crazy, basically giving anyone a mortgage. And they were luring people in by having some crazy mortgage terms where they'd have a super low interest rate for the first year or two, and then over time that interest rate went up and became unaffordable for a lot of borrowers. They also were doing very little to vet borrowers in terms of their income, their ability to afford a mortgage, their employment. And so all these mortgages were originated, and eventually it led to the industry collapsing. As we all know, the real estate bubble burst right around 2008-9, and prices collapsed. There was a wave of foreclosures, and things went crazy. Now, in response to that, both at the state level and the federal level, they made some major changes in regulations for mortgage lenders. And one of the main ones is called the Dodd-Frank Act, which is at the federal level, but different states also implemented their own regulations. Okay. Now these are regulations and restrictions on lenders, mortgage lenders. So these are the big banks, but also the small owner finance investor have to follow to make sure that the borrower is protected and make sure that they're properly vetted so that they can actually afford the loan. Okay, so basically it's to make sure that people don't get into a mortgage they can't afford and then end up losing their home to a foreclosure. Okay, it's going to happen no matter what, but we want to make sure we can protect them as much as possible. Okay, so that's the backstory. And if you saw the movie The Big Short, it's all about how this whole scenario went down. And it's a pretty good movie if you haven't seen it, but it'll give you a really good idea of what happened there. Okay, so moving back to today. So if you are looking at selling a property with owner financing in the US, so what that means is you're selling a house to someone and you're becoming the bank, right? So they're going to give you a down payment, you're going to give them a mortgage, and they're going to pay you as the former owner and now the bank monthly payments, right? So if you are originating a loan like that with owner financing, you need to make sure that you run your borrower through an RMLO, a residential mortgage loan originator. And an RMLO is a licensed person that is trained to make sure that the borrower is in compliance and the lender are in compliance with the Dodd-Frank Act for protecting borrowers and any state level similar acts or regulations. Okay, so their job is to go through, screen your borrower, check their income, their credit score, their employment status, all of these things, and then cross-reference that with the mortgage that you're trying to provide them, the interest rate, what the payments are going to be, etc., to make sure that they can actually afford that loan. Okay, and that way you're in compliance. Okay, so if you're originating a loan, it's incredibly important to vet your borrower that way. Okay. But if you're also buying a mortgage note as an investor, and you're buying a note from someone like that originated a note, you need to make sure as well that that borrower was vetted through an RMLO. And here's why. So you wouldn't necessarily get in trouble if you bought a note that wasn't vetted by an RMLO, but it's going to help you later on as a note investor. If you ever want to sell that note and it's not run through an RMLO, you're going to probably have trouble selling that to another investor or a hedge fund or something, or you'll have to sell it at a pretty steep discount. Okay, so having that RMLO certification or that RMLO package showing the borrower was properly vetted is going to help you sell that note if you ever need to at a premium. Okay, but it also gives you protection so that you don't end up buying a note where the borrower can't afford that loan and eventually you're going to have to foreclose or whatever. They're not going to be able to make their payments. So it's just more security that you know that that borrower should be able to afford that loan and that they were properly vetted to make sure that they're in a loan they can afford. Okay, so if it's not vetted by an RMLO, you may end up having to foreclose, or you'll have a non-performing note in your portfolio. Okay, so gives you more security and confidence knowing that that borrower is going to be able to keep performing. Okay, and then the other thing is if you did have to foreclose as the current note holder, whether or not you originated that loan or not, if you have to foreclose and that borrower were to challenge the foreclosure, hire their own attorney and challenge it, if that borrower had not been run through an RMLO and vetted properly in compliance with the state and federal regulations, then they may actually be able to push back and you may not be able to foreclose. Okay, you may be in some violations of those acts and they may not allow you to foreclose. So now you're stuck, right? You've got a borrower that can't afford the mortgage, but you can't kick them out. Okay, so for those reasons, even if you're buying a note, you want to make sure if it's an owner finance note, meaning that it was originated by some, small real estate investor, some mom and pop outfit, you got to make sure that they have that documentation before you buy that note so that you can move forward confidently. Okay. So if you have any questions about RMLOs, if you're needing a good one for your own purposes, feel free to post your questions underneath this video or reach out to me at cal@calewing.com, and I'd be happy to answer them and give you a little bit more clarification on how to check if you're buying a note to make sure it was properly vetted by an RMLO, or if you're thinking of originating a loan, I can show you how to go through that process.